Welcome back, YouTube, to the Hawaiian Trader channel. This is Cameron States. I want to talk to you guys about the basics. Now, this is hilarious because I get a lot of people that when I go on YouTube, I look at some of the stuff that's going on out there, I see what's available. And what's so funny is I get these videos that I'm seeing all the time everywhere that are saying, here's the basics of options, here's the basics of this, and then when I go in there, what I'm learning is these are individuals that have learned how to do something, and to them it's the very simple basics, but it's not basic. If you've never ever heard this before, when you get to the point where you start to understand how these things work, yes, there's some basics and they make sense. But for most people, even the basics make no sense. Now, that's a big difference between me and everybody else. A lot of people learn how to trade, and within a couple of years, they're day trading, they're doing all this fancy stuff, started a YouTube channel, decide they're going to share it with the whole world. I've got 17 years of experience, and I've got 10 years of educating in this space. Do you think I've learned something? Yeah, I've learned a lot. And I've learned that all the information in the books and the videos and everything that's out there is not basic enough. And here's the reason why. These concepts and these principles are just not readily available. More importantly, they're not taught. The basic principles of investing and money management is not taught to anyone ever. I told you before, if you follow my podcast, if you follow me on Instagram, you know I'm going off on this stuff all the time. But we just simply do not have the foundation and I'm talking about normal people. We don't have the foundation to understand what these conversations are about, or what these blogs or these articles or these videos, we don't even know what they're talking about, because we haven't been taught this stuff since we were children like we should have. We have no idea how this stuff works. And for me, I don't think you can add math. I don't think you can add numbers. I don't think you can add education or training to any of this unless you first of all understand, how does this stuff even work? How does it work? What is an option? Now, I've been on these videos and they'll tell you, well, here's what an option is. It's ba-da-da-da-da, and they give you this textbook answer. And I go, yeah, that's still confusing. All right, when you tell me there's options and they're contracts, they're based on 100 shares, there's calls and puts, I'm like, yes, by definition, yes. That is the basics of what they are. But that makes no sense to me and a normal person, and anybody who thinks normally, that makes no sense. So here's the skinny. In this video, we are actually going to break down the real basics, okay? The real basics, the way a normal person would think. Let's dive into it. Let's start with concept number one. Number one, you have to have some basic understanding behind how stock in the market works. Now, most people don't, because most people aren't stock traders. So let's break that concept down. Number one, what is stock? Well, the basic, most simple answer I can give you is to say, when a company decides they want to make some serious money, they decide to divide their company up into shares or small pieces. And they decide to make those small pieces or shares of their company available to the general public. Now, when you do this, think about this. And I'll use very simple numbers. Let's say that I have a company that I need to increase its value. And so I take my company and I divide it up into, and I'll use small numbers, 1 million pieces or 1 million shares. And let's say that I take those shares and I divide those up, and I'm going to keep most of them, by the way, but I'm going to make those available to the public, and I'm going to try to get an IPO, which is your initial public offer, and I'm going to try to make my shares worth, let's say, $30 a piece for a piece of my company or one share of my company. Now, think about why a company would do that. If I had 1 million parts, we're generally going to be trading, we're hopefully going to be trading at about $30 a share. You just went to $30 million like that. So why do companies have shares? Why do they go public? Why do they even do it? Money. It's that simple. You think about yourself. If you created a company that you loved, you were passionate about it, it made the kind of money and the lifestyle that you wanted, it created everything that you wanted, why in the world would you ever get rid of that? Or why in the world would you make that available to other people? The only reason you would do that is for more money. So that's what the stock market is comprised of. It's comprised of companies that have divided their business into small pieces, made it publicly available so that people can trade it. That's the basics, the very basics on what stock is. Now, you have to understand that concept before we can open the book and start talking about what is an option. Because you see, an option controls those very shares that we just talked about. So you have to understand that first. Now, let's really get down to these options because I'm going to give you the real basics. The options in the options market, there's only two options. There's a call option and there's a put option. Now, I want to talk about this because, again, my mind as a normal person, as soon as you start telling me there's a call, there's a put, there's two of these, they're contracts, I'm already lost, and I haven't even given you the definition yet. I'm already lost. It makes no sense. That's why I'm having this video for you. That's why we're putting it together. So let's talk about it. You have to think of the basics of a contract. Now, typically a contract has two parties. There's two people that are coming together, and there's two different parts. And in this agreement, or this contract, there's two different parties that have two different interests that are making a binding legal contractual agreement. That's what a contract is, right? Now, I think everybody knows what a contract is. Typically, at this point in your life, you've probably entered into a contract or two, or signed a contract or two. So you understand that. So now that we know that there's these two parties, let's talk about what is actually in the contract. Let's, to keep it simple, in this video, we'll just start with a call. Okay, a call contract. So let's talk about the two sides of these contracts. And I'm not going to use any math. This is just the real basics. So one side of the contract, it allows you to have the right to buy 100 shares of stock. So don't get lost yet. Let's think about this. I've got two sides of the contract. One side of the contract, somebody is coming to the table saying, I want to buy shares. Those same shares we just talked about. Now, again, my brain goes left field and goes, wait a minute, if somebody wants to buy shares, why would they not just buy shares? Why are they doing this? What is this called, a call? Why are they doing this call contract if they want to just buy shares? Just buy shares. Well, here's the reason why. These contracts are tied to shares of stock, but they're not actually the shares of stock. So let's talk about it. Why would I want to buy a call option, this side of the contract? It's because I might be interested in the shares, because I think the value of the shares are going to increase, or the value of the company is going to increase. But to buy 100 shares of stock, now let me tell you why I'm using the number 100. It's not arbitrary. I'm using 100 because typically in American options, one contract uses or is comprised of 100 shares. Now, that's not always the case. There are some contracts that do different amounts other than 100. And if you were to trade, let's say, European options, a lot of their options are 50 shares. So the reason why I'm using that number of 100 is because that's what American options do. You might not have known that. So I'm coming to the table, going back to our example, I'm coming to the table because I want to buy 100 shares of stock, but that might be very expensive. Think about some of these stocks that are out there. And if you're really new and you're like, I've never seen these before, there are some stocks that are less than $1. There are other stocks that their shares are over $2,000 for one share. So if you wanted 100 shares of a company that's worth $2,000, yeah, might be out of your price range. So let's say that I wanted to buy 100 shares of stock, but those shares are $100 a piece, and I want to get 100 of those, but I don't have the money. There's no possible way that I could buy 100 shares at $100 a piece. I don't have that kind of money. So then they would pick the option, the call option, because the call option gives me the ability to buy 100 shares of stock, but I only have the right to buy them. I haven't actually bought them yet. I'm just getting into a contract that says I could buy them if I want to. Now, the price of that contract, instead of 100 shares, is extremely, extremely less in value. So you might think, well, wait a minute, is that why they do it? That's exactly why you do it. Why would somebody choose options over stock? It comes down to two things. One, ownership versus control. That's it. Now, if you think about it, let's go to real estate. That's a very simple concept, right? In real estate, I could buy a real estate property for whatever reason, whether it's an investment or a single family residence that I'm buying for myself. But to buy a home, and let's use simple math here, to buy a home could, let's say, cost me $500,000. Now, if I take the loan on this property or even pay for it cash, the obligation I have is $500,000 plus interest. That's a very expensive business endeavor, or buying a home, right, for yourself, not even for business purposes. That's a big obligation that you have. So let's say that I wanted to get involved in the real estate market, but I don't want to get involved with the legalities or the responsibility of $500,000. I just want to be able to control a home worth $500,000 so that if it goes up, I can get some benefit, but I don't ever want to buy the home. Can you do that in real estate? The answer is yes, you can. You can get a property under contract. So let's say that I get a purchase contract to buy a home for $500,000. I'm agreeing to do that. Now, typically, until I get all the lending in place and the final touches have been put on the deal, I'm only entering into a contract saying that I will buy the house for $500,000. But I don't actually have it yet. Now, what if at the exact same time, I went out into the real estate market and I put the same house up for sale for $550? Now, I don't own the home yet. I just have it under contract for $500,000, but I'm already going to find another buyer for $550,000. Now, what if I could simultaneously make those two transactions happen at the same time? So at the same time, somebody's saying, you've agreed to buy the house for $500,000, but I already have a buyer for $550,000, and we do it all at one time. Can I do that? The answer is absolutely. You can do that in real estate. Now, the reason why I use real estate is because most people have been involved in real estate, or they just seem to understand it better. That is the exact same thing that an option is. A call option allows me to enter an agreement to buy shares that I'm controlling. I don't actually have them. And if the value of those shares increase, I can literally sell it back to the market. I can sell it back to the market for a different price, a higher price, and I can make the difference in value. That's it. And I never own the shares, and you never own the shares. I literally control 100 shares of any stock in the U.S. market, and I look for the value to increase. Now, this concept is what we're talking about. It's called control. Controlling assets instead of owning assets is the key to this entire conversation. Now, why? Let's go back to my first comment. Why do you not know this? Why have you not been taught this? Why don't you understand this concept? And when somebody flashes up a video or a book and says, it's easy, of course you're going to get it, you don't get it. Well, there's nothing wrong with you. You've never been taught this, meaning the entire infrastructure has never been designed for you to know. Let me explain this. In real estate, my philosophy in real estate is that you really should not own real estate. Owning a home, this idea of I want to have the American dream, and the American dream, an idea that we were sold, is to buy a home. This idea of owning homes, this American dream, was sold to you. Sold to you. Do you know who did it? The banks and Wall Street. So real estate is not a game for you. Real estate is a game, and I'm not talking about the investment side. There's a lot of things you can do in real estate that would be great. If I can get involved in real estate like a bank, I like it. But if I get involved in real estate as a consumer, it's never been designed for the consumer to make money. It's designed for Wall Street and the banks. It's never been designed for you. So if you've been sold the American dream that you need to buy a home and live in it for 30 years and pay interest on a bank loan for 30 years so you can have the American dream, that's a lie. That's made so that a bank can lend out money, borrowed money by the way, collect interest on it for 30 years from you, the consumer. but they had to sell you on the idea of the American dream to get somebody to enter into a 30-year loan. That's why you don't know. That's why Wall Street and that's why options make no sense. I hope that this video has cleared that up for you a little bit. I hope that this video cleared up the basics, the real basics of an actual call option. Thanks for joining me.